Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 11th at about 1 p.m. Eastern. Well, U.S. stock indexes are wavering, maybe even sliding a little bit south this afternoon, although we have gains in technology and growth sectors after inflation data calmed fears over policy tightening by the Federal Reserve. The S&P 500 is trading, it was trading earlier right at 42.38, just below a record high of 42.49, with heavyweight technology stocks serving as the largest boost. And that's what was going on a little earlier today. We're wavering right now. And on that note, let's look at three charts that could give us some insight into the week to come. Our first chart today, as always, is a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that follows very closely our S&P 500 benchmark index. Now, today when I captured this chart, I told you it was trading right near at all-time market highs. We see when I captured this chart, it was trading at $423.03. We had the all-time closing high on June 10th at, we're having it right, and June 10th was right here. Actually, that was yesterday at $423.61. So we're right there. We're right there. Now, if you back up and look at this chart, and I used to have a trading teacher back in the old days who was very, very good, and he used to kind of yell at us in a group, and he'd say, stand up, back up and look at the big picture. And you know what? Sometimes that's a really good idea. So if we kind of look left on this chart, we can see that the 50-day moving average, the green line, has been drawing very neatly or acting as a very nice trend line for the S&P 500 since back in November of last year of 2020. And you note how nicely the SPY has, except for a couple of little days here, how neatly the SPY has walked up the 50-day moving average, and really the 50 days acted as a great trend line for the SPY. If you look left back here, back into March and April, notice how price jumped up above the 20-day, the red line, and made I'm going to call it a high energy move, Indexes don't usually make as high energy moves as single stocks can because, of course, indexes are composed of many, many stocks. So there's always some stocks going down, some going up, and so you get with an index like the S&P 500, it may not be quite as exuberant a move as you'd get in an individual stock, but it certainly tells us a lot about what's going on, and that's why we watch indexes closely. This is the overall picture of the market. So you can see how this move in March jumped up above the 20-day moving average, and of course, finally, look how it became overbought on the 14-day RSI. Just coming up over that 70 line, meaning it was getting overbought. And when indexes or stocks get overbought, usually it doesn't mean they're going to go down the next day, but it means they are getting a little above their above where they can go here. So it did have an energetic move up here in end of March and into April, toward the end of April, and then said, okay, that's all I can pull off for right now. Came back down to the 50-day, down here, I believe that's about 405 you see here, rallied back up, hit its head on the 20-day moving average, which was support, acted as resistance, back down here to about 405, retesting that prior low, and then since then has wandered up and kind of walked along the 20-day moving average. Now, if you look at this like an energy thing, or you know what else? Look at this like stair steps, moving averages, moving up higher, nice angle like the 50-day and even the 20-day to a degree are doing here. Think of them as stair steps, and you're walking up those stairs. Now, when you start up the stairs, you've got a lot more energy, and you step up and your leg, maybe your knee moves up, and then your foot finally has to come back down on the stair. That's the 50-day moving average. You hoist another foot up, but you got to bring it back down to the stair. But when you get toward the top of the staircase, or you've gone a great distance on these stairs, your legs are going to get tired, and you're not going to take as big energetic steps up. So too has the SPY been getting a little tired here. Of course, we're going into summer months. A lot of the big traders are off in the Hamptons on vacation and not trading. You can look at the volume, compare it to prior volume, and say, yeah, it's a little bit low here. So right now, the SPY to me doesn't look like it has the same energy as it had before. Now, does this mean it can't jump up and make new highs next week? Of course not. Of course not. But, it's just something to note that it is kind of getting a little tuckered out here maybe. So we'll have to see. Does the SPY in the coming weeks or the coming week even have the energy to jump up over 424 and start in a new up move? Or is it going to just kind of wander around here above the 50-day? If it breaks below it and then below 405, of course, then we could see another leg lower. So those are all the kind of nothing exciting, honestly, going on here yet. And of course, as you know, in the market, some kinds of excitement we don't want. We like the kind where the market's going up, not where it's falling down. But anyway, watch the market, watch its position, the SPY to the 50-day moving average. Certainly keep that 405 level in mind. And of course, we don't want it. It'd be better if it doesn't head down here for the 200-day moving average. Our next chart today is the Invesco QQQ. As you all know, this follows the NASDAQ 100 index. This is more for our momentum stocks. Actually, the NASDAQ 100 are the top, by market capitalization, the top stocks that are non-financials in the NASDAQ stock market. So these are non-financials. Okay, so top stocks in this index usually include Apple, Amazon, Alphabet, all of those dudes, Microsoft, Intel. So we're looking at the QQQ today, and when we capture this chart today, the cubes, we call them sometimes, was trading at $340.17. Now on April 16th, it made its new all-time closing high right there, and so that's what it's kind of waiting to see if it can get over at $342.01. Of course, since that April high, it dropped down a little bit, went back up, retested that high, couldn't get over it, and then started down, hit these lows down here at 316. Rallied back up, tested it, got hit on the head by the 50-day this time, came back down 316 again, retested that, and then climbed back up over the 50 and 20-day moving average to get where it is now. So we can see we've got pretty low volume today. The RSI is not yet over the 70 line. Of course, we don't know if it will or not. It's kind of we're just kind of in a sleepy market today. We do have resistance up here at 342. Now look here, what we have getting created here is a triangle. Actually, it's kind of, we could call it a wedge if we wanted to as well. So you can see this trend line that I drew back here in October, touching 3 pivot lows. Actually, 4 pivot lows means it's a major trend line, and that's coming up here to give us potential support at 325. So we've got potential support for the Qs at 333 where the 50-day is, and 332 where the 20 is, 325 where this trend line comes in, and right around 309, 3010 where the 200-day moving average comes in. So again, we've got kind of a sleepy index here. We'll have to see in the coming week whether the Qs can get some energy going here and break to new highs, whether it's going to wander around between 342 and say, down here at 316. That's a possibility. Anything's possible. So remember, stocks will follow the SPY and they will follow the QQQ, higher or lower. So please, if it heads lower, please make sure your stops are in place and trade wisely at all times. Okay, let's go into our third index for the day. This will surprise you. We haven't used this one before. Okay, this is a chart, daily chart of the ARK Innovation ETF, symbol ARKK. Been a lot of news about this. You would think it was a brand new ETF, but it isn't. They talk about this a lot on the financial networks because it has some of the biggest momentum names in it. So the ARK Innovation ETF has 56 holdings at the current time. Top components, and this is one way to own some of these stocks if you can't plunk some money down for the high price ones. The top components are Tesla, Square, Teladoc, Roku, Zillow, and Baidu, and Zoom. Those are some of the top stocks, so it's one way to own them if it looks like it's going to go higher. When I captured this chart today, the ARKK was trading right here at $115.14. Now, just to give you a little history here, the ARK was actually created in excuse me, in 2014, November of 2014, but we haven't heard much about it, or I certainly haven't, except for, like, say, in the last year or so, Innovation ETF, right? So it did come up this year in February. It came up this year, made an all-time highs in February at about 159, climbed up its 20-day moving average through the last quarter of the year. Then into February started falling, fell pretty dramatically because momentum stocks can fall dramatically. They definitely can. So it did. It came down here to these lows down here at about 109. Then as stocks and indexes will do, it moved up to its 20-day moving average, could not get over the 20-day moving average, fell back down, retested these 109 lows right here, then started back up, finally got over the 20-day, rambled around for a while, smacked its head on the green line, the 50-day, then headed south, said I can't do it, and fell with most tech stocks as they did starting the middle of April. Most tech stocks, many of them tended to sell off a bit as we got, actually as oil, some of the basic materials took over for a little while, and financials certainly. So got down here, down to right about 100, a little lower than 100, right about 100 here, got down to these lows, rambled around a little bit, retested them a couple of times down here, and then finally now is starting higher. So we have another triangle here. Got this trend line from back here in October. It's touched several times, so we're good. But now this trend line was support. This blue trend line is now resistance. So we've got quite a bit of resistance here. We've got the 50-day moving average coming in at 115. We have the 200-day moving average coming in at 116. We have a trend line coming in right here at 115, 116, and that, of course, is right where price is at 115.14. So, and it has made a higher low. It is a triangle. Triangles, as you know, tend to break. When they break higher or they break lower, but they don't just usually make a triangle and then noodle around for a while. They usually break at some point, higher or lower. I like triangles to break about 2/3 of the way into it. This one isn't cooperating that well, but we don't have to buy it either until we see which way it goes. So, and some people could call this a little mini cup with a handle too if they wanted to. So, but it's not a completed one until if in the coming week the ARK rises above $116 and stays above it, I'd like to wait for 3 days, but the break might, if it does break higher, it could be more dramatic, and I don't want to miss out. So if it does move up and over 116, I will add a small position to my trading portfolio. My initial stop's going to be down here under the 20-day at 109. If the ARKK rises above 127, this is the next inflection point here. This is where we're going to probably get some resistance here. We'll have to see how it works. If it rises above 127, I will add to my position, and of course my stop will be a trailing stop by then. I'm not interested in getting tangled up in a market that heads lower, so I'm going to keep my stop a trailing stop at all times. So if the market remains strong in the coming week, you may want to keep an eye on the ARKK. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time. The summer months are great while it's a little quieter to check out my trader training programs. You're going to enjoy my powerful strategies. They're devoted to swing trading, trend trading, bottom fishing, and many, many more strategies. My programs are easy to understand. I make them that way on purpose, and they can help you increase your gains quickly and easily. If you'd like to see all of my training programs, simply go to the link on this screen right here, or simply click on the orange button below. And now for final thoughts. Our question this week is, when I trade, am I attuned to the market and its trends and moves? Am I attuned to the market and its trends and moves? And you know, we can kind of think back to a minute ago when I was talking about the SPY and how it had that energetic move in March and April, and then how it's kind of now slowed down, not quite as energetic. That's trends and moves. And recognizing that by backing up a little bit is a really good thing to do. It can make you money and save you money. So as traders, we want to attune ourselves to the market's moves. We want to kind of feel inside, if you can do it, the market's ebb and flow. Now, the trouble is we're exposed to a million messages by way of the internet, television, radio every single day. Our senses are literally bombarded with images and ideas, and they come at us nonstop, especially if you've got the TV on next to you like I do when I trade. As humans, we have learned to be effective with messages we are confronted with. We have learned to be effective. We've learned to either block them or fast forward them. This is called a learned response. For example, say your wife or your husband, your partner, your friend starts to tell you something. If you have a lot on your mind, you will either pretend to listen, but you really don't hear it all, which is called blocking. Or maybe you move into fast forward thinking, meaning you already know, or you think you do, what he or she is going to say. Now, many times in the stock market, we think we know what's going to happen next, but we really don't know what price is going to do next. And I can tell you that I don't, no one on television does. If we think we know and it happens to go that way, that's purely a good guess. So if it moves the way we believe the market's going to move and we're all set for that, then it's going to go well. If the market doesn't move the way we think it's going to go, we are usually not well served to block the message it's giving us, to block the message and go, oh no, well, it'll be all right next week. If we own a strong belief system going that a stock is going to rise in price, and it doesn't, we will believe that it will rise even as it progressively falls lower. Have you ever done that? You've got a strong belief system that the stock's going to go higher, but it doesn't. And you keep watching it and you keep saying, well, it's a good company, it'll come back. It's a good company, it'll come back. Maybe, maybe not. Please strive, that's why you need a trading plan. Please strive to keep a nimble mindset. Yes, you have to assess the facts in the charts and believe there are opportunities in front of you that have potential for making money. Absolutely. Still, you'll want to avoid the human reactions of fast forwarding, meaning you believe you know what's going to happen next, or blocking, believing a stock price will rise even as it falls, or vice versa. So make it your goal to flow nimbly with the market, trade what is, not what you think you're going to have, trade what is, not what you think is going to happen, and keep an open mind at all times. Okay? Got that? Finally, please know that if you'd like to become a more consistently winning trader, this is a great time to check out my trader training programs. To see all of my online programs, simply go to the link on this screen right here, or simply click on the orange button you see below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.